The South Korean stock market continues its bull run with yet another fresh high on this Tuesday. Our Kim Do-yeon has the latest.
The KOSPI continued its upward trend for a second consecutive day, briefly hitting a new intraday high. On Tuesday morning, it rose to 3,494.49, with the market now seen on the verge of breaking the 3,500 milestone. However, the initial momentum slowed during the day as it closed at 3,486.19, still a significant increase compared to the beginning of the year. The rally is being fueled by strong foreign and individual investor buying. In contrast, institutional investors have been net sellers. Leading this charge are South Korea's two largest companies by market capitalization, Samsung Electronics and SK hynix. Samsung Electronics rose to a new 52-week high of 85,900 won during trading, with some securities firms now raising their target price to the 100,000 won range. SK hynix also continued its ascent, trading in the 360,000 won range. This bullish sentiment in the semiconductor sector follows a record-setting session on Wall Street overnight, where all three major U.S. indices closed at all-time highs, driven by gains in tech giants such as Nvidia and Apple. But amid the overall gains, there are some points to watch as only big-name stocks are driving it up.
The significant point is that Samsung Electronics, SK hynix and Samsung Electronics preferred shares, just these three stocks alone, account for over 17 points of the index's movement. In other words, although Celltrion also contributed 3 points with its 7% rise, the index would actually be in negative territory if these three stocks were excluded.
In addition, investors should be aware that there are signs the market is overrated, considering the KOSPI's 12-month forward price-to-earnings ratio was noted to be around 10.4 times, slightly above its 3-year average of 10.2 times. Some analysts point out that if it's above average amid a global economic slowdown, this could mean it is overrated. Kim Do-yeon, 아리랑뉴스.